In a remarkable feat, India has achieved an 8.4% growth rate in the third quarter of the financial year 2023-2024. Now, this is the fastest rate of growth in the last 6 quarters. Not only is it the fastest rate of growth in the last 6 quarters, but it is also unexpected because as per many economists, they believe that India will slow down in the third quarter of this financial year and that India's growth rate was expected to be at around 6.6%. However, much to their surprise, not only did India not slow down, but it beat their expected numbers by 1.8%. This growth has led to the NSO, which is the National Statistical Office, to revise the growth rate for the entire financial year, this financial year 2023-2024. They've revised the economic growth from 7.3% to 7.6% for this financial year. The NSO has also revised the data for the previous 2 quarters, and the rate of growth for the first 2 quarters stood at 8.2% and 8.1%. Now, before we dive deep and understand the reasons for this phenomenal rate of growth, please subscribe to our YouTube channel. So, how did India achieve an 8.4% growth rate in the third quarter of this financial year? A major reason for that is the double-digit growth of the manufacturing sector. Now, the manufacturing sector is the only sector that has grown by over 10%. To be specific, by 11.6%. So the numbers for the manufacturing sector in terms of gross value added stand at about 6.53 lakh crore rupees or $78.8 billion. And as compared to the previous year's numbers, this number stood at 5.8 lakh crores or $70.7 billion. Now, it is important to note that the comparison that we're looking at is in terms with the quarter 3 of the financial year 2022-23 and not the second quarter of the financial year 2023-24. Now, the manufacturing sector is not the only sector that has contributed to this growth. Now, there are other sectors, specifically the construction sector as well as the service sector, that have contributed 9.5% and 9% respectively. And when we look at the numbers, the construction sector posted a gross value added of 3.6 lakh crore rupees or $43.4 billion. And this number was 89,670 crores for the service sector. Now, while these sectors have helped India grow, they've boosted the Indian economy, the agriculture sector actually contracted. The agriculture sector contracted by about 0.8%, which means that the agriculture sector actually fell. And the agriculture sector's contribution fell from 7.08 lakh crore rupees in the third quarter of the financial year 2022-23 to 7.02 lakh crore rupees in the third quarter this year. Now, when we look at the gross value added, it showed a growth of about 6.5%. And when we look at the GDP, it showed a growth of 8.4%. Now, why is there a huge divergence between the GVA, which is the gross value added, and the GDP, which is the gross domestic product? Now, before we answer that question, it is also important to understand that both GVA and GDP are economic indicators. And the way we calculate the GDP is when we add net indirect taxes to GVA. So, GDP equals to GVA plus net indirect taxes. And now, what are net indirect taxes? Simply speaking, net indirect taxes are taxes minus subsidies. The net taxes or net indirect taxes for the government, they grew from 2.93 lakh crore rupees to 3.87 lakh crore rupees, which is an increment of 32%. Now, this could be due to two reasons. Either the government has decreased subsidies or the government has increased tax collection, or a combination of both. And this is exactly why we are seeing a divergence of about 1.9% between the GVA and GDP. Now, to simplify it all for you, let us take an example. For example, I sell customized t-shirts and the cost of purchasing one simple t-shirt, one plain t-shirt is $5. And on top of that, the materials that I require to basically customize the t-shirt cost me about $3. So the total cost of this particular t-shirt comes out to be $8, $5 for the plain t-shirt and then $3 for the materials involved, right? And then suppose I sell that particular t-shirt for $20 in the market, right? So the gross value added will be $20, the cost at which it is sold in the market, minus the input costs, which were $8. So $20 minus $8, and the gross value added here comes out to be $12. Now, the government charges a $2 tax on each t-shirt and also provides $1 subsidy to small businesses creating these t-shirts. So the net indirect taxes come out to be taxes minus subsidies, taxes of $2 and subsidy of $1. So net indirect taxes come out to be $1. Now to calculate the GDP, we will add GVA, which is gross value added, and net indirect taxes. So the gross value added that we calculated came out to be $12 and net indirect taxes came out to be $1. So the GDP will be $12 plus $1, which is $13. So I hope you understood the connection between GVA and GDP by this example. And this is just one t-shirt that I'm talking about. Now, it is also important for us to understand why is this growth really important for India? What makes an 8.4% growth rate for India at this point so important? Many global economies, they're either in recession or they're facing a risk of recession. Two of the biggest economies in the world, the Japanese economy and the UK economy, they're already officially in recession. Not only that, but about 20 countries, they're facing a risk of slipping into recession. Now, Germany, which became the third largest economy of the world when Japan slipped into recession, is also facing a risk of entering recession. Germany's GDP actually shrank by 0.3%, 0.3%. And if this trend continues, if Germany's economy continues to shrink, it will also enter recession. But this risk of recession is not just limited to Germany. There are other countries, including Canada, Lithuania, New Zealand, Colombia. These countries are also part of the 20 countries that are facing a risk of recession. It is also important to note that many of these countries, if they enter recession, India is also going to be affected by this because of the exports of India to these countries. For instance, India's exports to Germany account for over $10 billion, and India's exports to Japan, which is already in a recession, account for over $5 billion. These are the two major economies that we're talking about. But when we look at other economies as well, India is exporting to many of these countries. And if they fall into recession, India is also going to be affected by that because the demand for Indian exports will decrease rapidly. It is also important to note that the second largest economy of the world, China, grew by 5.2% in 2023. Now, China is already facing the biggest real estate crisis that it has ever faced in its history. And I've talked about the Chinese economic crisis in a different video. You can watch this video here. The link is in the description below. Now, China is already facing a crisis, and the Chinese economic growth is also expected to slow down in the coming years. Not only that, but India is expected to be the driver of Asia's economic growth. So while things at the global level, they're not really looking good when it comes to economic growth, India's economic growth is an indicator that things are looking good for India at this point of time. India is receiving a lot of eyeballs. Not only that, but India is also receiving a lot of investment from countries, from major companies from around the world. Many international companies, they're shifting their production units from China to India, and many of these international companies, they are investing heavily in India. And this makes sense when you look at the economic growth. And not only the economic growth, even when we look at the Indian stock market, it recently hit a valuation of $4 trillion. It went past the Hong Kong stock market, which was the fourth largest stock market in the world. What do you think about India's economic growth? Do you think that the Indian economy will continue to grow in the coming quarter as well as the next financial year? Please let me know your thoughts in the comments below. If you found this video valuable, please share this video with your friends and family, and also subscribe to our YouTube channel. Thank you for watching this video and have a great day.